Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Welcome to the only show in the country dedicated to helping savers worry less about money, the Worry-Free Retirement, with your host, retirement specialist and six-time author and fiduciary, Tony Walker.
Welcome, savers, to the Worry-Free Retirement. I'm Trey Juergens, full-time fiduciary here in the Louisville office, joined by Wes Walker.
Good morning, Trey. How's it going?
Good. Thanks for being here. Today, actually filming on Election Day 2024, I know one thing all Americans can agree on is a worry-free retirement. So what we did here is we've used savers' views on our YouTube channel to tell us what the most important clips this year are.
Almost like they're voting on it, right?
Exactly. With over 550 TV shows recorded, with over 400 radio shows recorded, YouTube's been another platform for us to get a lot of really good content out to savers absolutely free.
That's awesome. And if folks want to subscribe to the YouTube channel, they can go to Tony Walker Financial on YouTube and just click the subscribe button, right?
Exactly right.
Well, we would appreciate it if you did that. But so jumping into our first video, I think we're talking about annuities in particular, the differences between an income rider and a contract value on an annuity. Annuities have become really popular in 2024. Trey, I think we know the answer to this, but why is that so much annuity volume has come through the works this year?
Yeah, so since 2022, there's been double-digit growth in annuity sales. And it's really, I think, just people being unsure of what's going on in the market.
Absolutely. And the guarantees that come with annuities, I think, have driven a lot of people into that world. So without further ado, why don't we roll our first clip on annuities?
Sounds good.
In speaking of income riders, it's important to note that an income rider is something that is attached to an annuity. Now, before I explain income riders and something we call mailbox money, let me explain what a rider is. Let's imagine you have an expensive ring. Maybe it's worth $15,000 or $20,000, and you want it insured. So you're assuming that the ring is covered under your homeowner's policy, and it is, but only up to a certain amount, maybe $1,000. So you talk to your insurance agent and you say, I want the ring covered. And the insurance agent says, well, that's fine, we can cover it, but we're going to have to add a rider. In other words, something in addition to the contract, and that is going to cost an additional premium. So anytime you hear the term rider on an insurance contract such as an annuity, it's going to cost extra premium. So why would you pay the extra premium? Well, because an income rider product, an annuity, where we want mailbox money, the insurance company now is guaranteeing, listen closely, that you or your spouse will never run out of money. So they're going to need an extra premium to cover that risk because they don't know how long you're going to live, and a normal insurance contract really doesn't take that into account with what I'm going to explain to you. Now, as the late, great John Bogle once said, any insurance agent, any financial advisor that throws out an idea for a product, hopefully is eating their own cooking. And I have done just that. So the product I'm going to describe is an income rider product attached to an annuity, and I'm actually describing my product. I have this same annuity, okay? So with any income rider, there's going to be two values. There's called the contract value and the income value. And really the income value is what we're using for the mailbox money. They go hand in hand. The contract value, I like to call that the death benefit, okay? In other words, what's going to be possibly left over to your family when you pass away. So let's talk about my particular, and mine had a 10% bonus. We still offer this product. We'll be happy to get you a quote if you're interested. But basically, back in 2013, I put in $189,000 into this bonus annuity. And because they gave me a 10% bonus, they added $18,000 to it. Now, here's the catch. I cannot take all of this money out for a minimum, and this contract was like 14 years, which I don't plan on it. And if I do cancel it, there's surrender charges. So be aware. Any bonus contracts, they're even going to throw heftier surrender charges on there. So be very careful. Make sure you understand what the bonus is for. So basically, we're going to fast forward now. So this contract has grown a little bit. The contract value is now worth $221,000. So let's say me and my wife Susan are killed in a common accident. That's what my family would get. Not bad, a small rate of return. But again, I'm not buying this for a death benefit and loading up my family with cash when I die. I want it for future mailbox money. And this account, guaranteed as long as it's in deferral, is growing at 6.5% guaranteed on the income side. So you have to watch this, folks, because a lot of people pitch these products. They're not telling you that. That's the income side. So now in 2013, the income rider had grown to $324,000. And you can see on the full screen here, that means that the $324,000 still growing at 6.5%. If I wanted lifetime income, this is back in 2020, I would receive $14,600 a year for life. Not bad, but I didn't need the money, so it's still compounding. Now the contract value is up to, $238, so it's growing a little bit. That's the death benefit. But look at the income value. It's now up to $417,000 guaranteed. And look at this. If I decided to take income now, I would draw $18,784 a year for the rest of my life. So you might be saying, what's the point, Tony? The point is, if you are one of those folks that's worried about running out of money and you're looking for a safe place to invest your money and you do not need the income now, an income rider product might be right for you. But who knows, right? The best way to find out if this is something that would be of interest to you is we just need to talk by phone. So I would encourage you to log on to TonyWalkerFinancial.com, click on that Let's Get Started, or call us anytime at 877-499-9255.
Yeah, so Wes, with that clip there, Tony speaking to income riders on annuities. Annuities are being sold, record numbers. We're on pace to top $400 billion with a B in 2024. LIMRA, who studies the sale of these products, they actually anticipate from 22 to 24, which again, those are good market years coming out of 2022, that annuity sales will exceed $1.1 trillion. So speak to why some savers are maybe pulling some winnings off the table.
When you get into retirement and the word guarantee becomes pretty tantalizing to you,
Yeah.
To be able to have a number on paper that you know you will receive in the future, and that's essentially what an annuity is. It's a promise that you'll receive a payment in the future for the most part. So to be able to have that in your back pocket and know that that's the case, it does hold a lot of value to savers. Again, I would just make sure that when you're buying these annuities, I wouldn't buy them from any Joe Schmo off the street. Make sure that the person you're working with has used annuities in the past and knows the good ones from the bad, because there are some pretty rough products out there.
Yeah. So with 401ks, S&P seeing all-time highs in this 2022 to 24 timeframe, give us this magical age that some savers have decided to go get a game plan in place.
59 and a half is what is often referenced as the magical age of retirement. And it basically just means that after 59 and a half, you can take out the money from your retirement accounts without any penalties. Usually, if you do it pre-59 and a half, there's a government penalty that's imposed. So a lot of people see that as a fruitful time to retire.
Yeah. So let's take a look. This next clip is Tony talking about that magical age of 59 and a half.
You know, two of the most important ages in retirement planning are as follows: age 59 and a half and age 73. This is the period of time I refer to as halftime. Now, why are these two ages so important? Well, with the WorryFree Retirement, we're a little unusual because we have a philosophy that we use and guides us in principled, structured approaches for our clients, which are savers, so they can understand what's best for them before they make a financial decision. And here they are. These are the three tenets that we try to adhere to. Before a saver makes any kind of financial decision, we want to make sure they have use of the money, control of the money, and maximum flexibility of the money and the financial decision they make. And in many cases, they lose that when they work with financial advisors in the financial institutions because they're not thinking that way. They're either just trying to grow your money or they come in with a transaction, but they really don't understand retirement planning and this important window of opportunity to not only hopefully save on taxes and use and enjoy your money, but to understand that between 59 and a half and 73, here's the key, is the most flexible time to what? To enjoy your money, okay? Folks, the whole point of Live Well, Die Broke is to enjoy this money before it's too late. And many of you have been listening to the financial world too long. You're scared to spend it. You're worried about inflation. Maybe you've locked yourself into products that have taken complete control and flexibility away from you. This is why you need a game plan. So in the worry-free retirement, if you're between these ages or you're approaching these ages, this is very important. You need to have that game plan. So what's the significance of 59 and a half? 59 and a half is that age. From that point forward, any money you can take out, any money at all from that tax-infested 401k or IRA is totally flexible. If you want to take out $40,000, no penalties. You want to take out $150,000, no penalties. Now again, there's taxes involved, but it is so flexible to draw money out. Plus, we can work with you on coordinating with Social Security. Met a gentleman the other day. In his case, we're going to delay Social Security. He has a very large IRA, and we need to get rid of that tax tumor, so we're going to spend down some of that money, then take Social Security. So that's an important age. Well, what about 73? Well, if you pass the age of 73 and you haven't done any planning, everything has to start coming out of there. That's called your required minimum distribution. And again, most advisors don't stay on top of this. They don't worry about it. You just have to pay it. Folks, that's not a plan at all. So here's what I would say, particularly if you're approaching 59 and a half or approaching 73, we need to talk. Because at Tony Walker Financial, not only are we experts in the field of retirement planning, we also have on staff tax-certified experts that can help when once we lay out the game plan, we can try to minimize these taxes. Why? So you can use and enjoy more of your money. So to get started learning more about Tony Walker Financial, why don't you do this? Log on right now to TonyWalkerFinancial.com, click on that Let's Get Started button, or call us anytime at 877-499-9255. Have you recently retired, been laid off, or offered a pension buyout? Has the company you work for moved, been acquired, or closed its doors forever? And finally, do you have a 401k with a previous employer you'd like to move to safer territory? Then take advantage of this opportunity to move your 401k or lump sum pension to Tony Walker Financial. Let's meet in person to discuss your retirement options. Log on now to TonyWalkerFinancial.com to schedule your free, no obligation appointment. Let us help you today.
Yeah, so Trey, that magical age of 59 and a half kind of ties into our next clip, which is about taxes. Mm-hmm. And as we know, the tax laws as they're currently written are set to expire at the end of 2025. We don't know what's going to happen, but we know there may be some changes coming down the way. So with that being the case, what should savers be thinking about given that they may have a lot of money in pre-tax retirement accounts?
Yeah, so 401ks traditionally are very heavily pre-tax. IRAs, they're all yet to be taxed. So when you don't really have a plan for how you plan to take money out of those accounts, you really could be throwing yourself into a higher tax bracket. So with historically low brackets, at least until the end of next year, that may be a time for some people to do some planning and really mitigate that tax tumor.
Definitely, but you've got to watch yourself because you need somebody to help you along the way. If you're earning income and then you're pulling money out of these IRAs and 401ks, it could really get you into some trouble. But I think that's kind of what this next clip is about. Taxes in the future and how they relate to retirement planning.
Yeah. So here's Tony with the next clip.
So let's kind of walk over to the whiteboard. I'm just going to kind of show you a little bit about what we go through in our mind's eye when we're thinking about this notion of back in 1978 when the government created this thing called a 401k plan. So you have to understand, back in 1978, tax rates were fairly high. And the idea, or the pitch, if you will, in 1978 was, okay, let's say you've got a 401k now, and you're contributing to that 401k, and let's say back then the tax rates were 30%, okay? And you're putting in money into this 401k, and yeah, over time there's going to be a tax tumor building up, but if you didn't do the 401k in a pre-tax manner, which is what the 401k is, you would owe 30% in taxes. So the point was, hey, invest out and max out. Put as much money as you can in this 401k because it's pre-tax. And the idea was one day, let's say it's worth $1 million. I mean, a big old number here, okay? We're talking about now versus later, 30 years later. The idea was, hey, you're probably going to be in a lower tax bracket, let's say 12%. So the tax savings meant that even though this was 30%, this would be a very small point in the future. But again, as we have these rates now that you look at that and go, well, that makes kind of sense, doesn't it? It seems like that's what happened. It is what happened, but the problem is moving forward. Back then, we didn't have $33 trillion in debt in 1978, which is what we're dealing with now. And the fact is, nobody in Washington that I can tell is addressing this debt and using money to pay it back. So where might they get this tax revenue to pay back this debt? Right here. So I've got to ask you a question. Let's say you're continually deferring money and you don't want to pay any taxes at all, and you don't think taxes will go up in the future. What if taxes went up to 40%? Could that happen? It sure could. And the problem is, if those tax rates go up, then the actual amount of money, that tax tumor, goes up with it. This is not a good thing, folks. And the point is, we don't know what the taxes are going to be in the future, but we do know what they're going to be today.
So another great clip there, Wes, with tax planning, having TJ and Leanne on staff to provide that advice to us as we plan, but also to our savers directly, has been such a value to our clients.
Absolutely, yeah. I think Tony's primary objective has been so that he can see as many people as possible. It's not so much that he can spend so much time doing paperwork, but more meet face-to-face with clients. I think that's kind of the reason that he's employed so many people and we've got so much good staff on hand.
Yeah, our staffing is not typical of the industry, but like you said, Tony wants to be in front of people meeting with savers. So just looking at our schedule here this week, between yesterday and today here in Louisville, Tony personally saw in person 9 first appointments, 11 second appointments, 11 client reviews, which is totally not typical of advisors. Those are usually passed off to younger advisors, as well as 1 death claim. With retired clients, unfortunately, we do have clients passing away, but we don't stop there. We help get the beneficiaries the money that they deserve. So in doing that, the staffing is a little bit different. So speak to that and then cue up this next clip for us.
For sure, yeah. So, the typical advisory firm would have more advisors on staff because those are the people who are selling. Those are the people who are bringing in revenue to the business. In our firm, we've kind of reversed that. We've hired more service staff. Tony's picked out more people who can help us facilitate the daily things that need to get done. And there's a very small number of advisors, but we're there to help our clients with whatever they need.
Yeah. So here's this next clip, Tony talking about our staff.
Awesome.
In keeping with our theme of Here We Grow Again, I wanted to kind of go over our structure at Tony Walker Financial and how we are so unique in what we call the ratio of advisors to service staff. So when you're thinking about working with an advisory firm, you have to ask yourself, are they going to be more sales-oriented or more service-oriented? And again, I'm not going to speak for all advisors. I don't mean to do that. I'm not trying to disparage anyone, but we have to take a look at how the typical advisory firm is set up. So let's take a look at this graphic that our own Derek Hudson created. And this is called the sales-heavy method of structuring your business model if you're a financial advisor out there in the financial world. And if you'll notice, the typical advisory firm has a lot of advisors. Now, these advisors are charged with finding new business and working with certain clients. Usually the advisors are assigned to certain clients. So if you called the firm and if the advisor's not there, probably nobody's going to be there to help you, nor the advisors are going to weigh in on it. They're going to have to wait till the advisor comes back. So you're kind of assigned an advisor, which there's nothing wrong with that. But then you have the problem of getting to know an advisor, and what if the advisor has a certain type of game plan or structure and they leave the firm? It happens all the time. Then are the other advisors going to follow the same policies, procedures, and investments that the advisor you trusted before is going to follow? Hard to say. But if you'll notice, something happens here. The ratio, the number of advisors to service staff, is many times very limited. In other words, there's kind of a 5-to-1 ratio. In other words, 5 advisors might only have 1 service staff member. Again, this is not complete for all advisory firms. This is just what I see in terms of the structure. More advisors than there are service staff. Well, let's take a look at Tony Walker Financial. We tend to say we are service heavy. In fact, as we talked about only having 3 staff members in 2012, and now we have a total of 19, that's not even including myself, 19 service professionals, we are more service heavy. And here's how this looks. Of course, we have myself, Tony Walker, the owner of the company, who is what we call the lead advisor. I pretty much meet with all new prospects. I meet with a lot of the referrals that we get, a lot of the clients that want to come see me. We have an open door policy for anyone who wants to meet with me. I'm going to make my best efforts to do that. But then we have 3 trained salaried fiduciaries underneath myself who have been trained in the WorryFree retirement process. What's unique about that, if you call into the office, if I'm unavailable, one of these other trained fiduciaries is going to be there to assist you. And you might say, well, how are they going to know what I need? Well, that's the beauty of having the written game plan. The game plan is going to quickly instruct our advisors into what's going on, what questions you might have, And now, of course, they can't feel like they can handle that question. They're going to defer that back to me. But these folks are highly trained and in most cases can answer all of your questions no matter who you are as a client. But look at all the service staff. Right now, let's go up full screen with this, Derek. Look at all the people employed by Tony Walker Financial. Of course, we have myself, Heather, Trey, and Wes. Those are all fiduciaries. But if we get down to Gina, she's the office manager in Louisville. We have Shannon, who does all of our trading with our Charles Schwab. JJ handles all the new business in the annuity department. We've got Mandy in charge of service. Lisa Allerkamp, she's in charge of the income planning department that orchestrates all of those wonderful income plans. We have Leanne, who is tax certified. We have Shanna Zachary over here to the far left, who's in charge of scheduling all of my appointments. Juanita Jackson, who's located here in the Louisville office, who is in charge of all the Schwab new business. TJ Timmy Reagan, who's actually one of our other tax certified specialists. We have Wendy. We have Craig, who does all the rollover calls. We have Caitlin. Beth, who's new to our firm, who also handles all of the onboarding. So if you want to move forward, she's going to get all the details in place. And then we have Alyssa, we have Mary Beth, and we have Casey, who just recently joined our firm. Again, a wonderful staff, but as you can see, as we grow, we're also going to grow our service department to keep up with that growth. So if you're looking for a firm that is maybe more service heavy instead of sales heavy, why not give us an opportunity to talk more about the details of our work and our process at Tony Walker Financial?
Yeah, Trey. So I think that clip really shows Tony's intent to help more and more savers stay in front of as many people as he can and just make sure that all the people who have entrusted us with their retirement savings can monitor their progress and that we can see new people and prospects. Because again, the goal is to help more and more savers worry less and less about money.
Yep, that's the motto of Tony Walker Financial. So the unique staffing model isn't something that you typically see in our industry. They want more and more advisors to sell more and more products to more and more people without really any obligation to service the sale, which is not how we do it. So having more and more staff to service the sale is really what Tony's put this staff in place for. And enough hearing it from us, I think these new clips that we've been putting on YouTube and in the show, and actually if you see them on TV as a commercial, are client spotlights. It's a new thing we're able to do thanks to the marketing rule. The SEC allows fiduciaries like us to now share client testimonials, ratings on Google, Better Business Bureau. It's a really good way for savers looking for our services to find us, but also hear it from someone just like them.
Awesome. Well, I think it's about time. We'll roll that clip.
Here we go.
Our client spotlight features today Larry and Elaine Mitchum. And Larry and Elaine, it's been so good to have you with us, and thank you for joining us.
It's a pleasure always to come out and meet with you, Tony. We've enjoyed the relationship over the last several years, without a doubt.
Well, let's go back to that. So first of all, tell me what you did for a living.
I was a pesky insurance man. I was in it for about 40 years, but dealt primarily with property liability and workers' comp for public entities. And the majority of our business for me was working with boards of educations, but also city and county governments and political subdivisions, water district health departments, and traveled throughout Kentucky for about 35 years before I get to that point.
And Elaine, you did not work outside the household, correct?
Well, I worked when I was younger, but then when we met, I didn't have to work because he made all the money. So that was good, and it helps. It helped us be with the grandkids more, and do what we wanted to do at church and all those things. So
that's wonderful.
Yeah.
And so, remind me, how did you find out about Tony Walker Financial?
Well, I tell you what, we didn't really have an interest, but when we got to that point where we saw the light at the end of the tunnel of getting to a point of considering retirement, first of all, was a blessing, and boy, did those years go fast before they got there. And then it's like, okay, hey, we're really going to have to start looking at what we want to do because, like I said, we had been blessed, and I've seen a couple commercials on TV with that. And then I think we had just talked to Elaine and I, let's watch one of his episodes that he has, one of his shows. And so we did that. And then we were always touched and encouraged by your openness of expressing your faith. because we gave our life to Jesus and God years ago. And I have always had that saying, I'm walking, living proof that the good Lord takes care of those that can't take care of themselves.
For sure.
And then he said to submit in all things. So this was one that we prayed about. And even though we had been working with somebody else and generating our retirement savings, I had just seen him show up in ways where he has tried to direct us and give us a message of maybe that. And just after watching your shows, Elaine and I talked about, let's just at least go out and listen to what he has to say. And that's when we called to schedule an appointment to come out and visit with you, just to hear, your philosophy of getting it. And I loved your ideas for live well and die broke. Maybe I'm trying to follow your advice in that one right there. I probably should that.
So, Mitchum's, one of the things that's exciting, since you've retired, you're not really retiring, you've just taken on a separate vocation. Tell us a little bit about the ministry.
I took quite a few lefts in the game of life. Been clean from drugs now for about 35 years and alcohol about 15 years. And be members of Fairdale Christian Church. Another guy had started to Celebrate Recovery. And it's just it's a substance abuse program, not just substance abuse, but dealing with hurts, habits, and hang-ups of individuals that are struggling with life challenges. And it's a faith-based program for recovery to deal with those so that you can face them and get on with a life and facing challenges. And as we have a saying, our plaque above our deck out there is that life's not about waiting for the storm to pass, it's learning to dance in the rain. That we've understood through his word, we're going to face trials and tribulations, but we do have a choice in how we respond to those trials.
And I got to ask you, Elaine, now that you've been a client, you and your husband, of Tony Walker Financial, how would you surmise your experience, not only just getting to meet me and getting a game plan, but working more specifically with the staff here? I
think they've been wonderful. I mean, we can call anytime, and they're always, they always get back with us right away if they can't at that time. And that's important. That's real important to us to do that, to be able to know that we can call at any time and they're right there for us. And it's been wonderful.
I think it's been beneficial for us, too, not just the professionalism, but the attitude from which they deal with. And like I said, we can feel the joy out here, without a doubt. Yeah. We talk about the joy that transcends all understanding. And just to partner with those, like I said, it makes it worthwhile.
Well, I'll take that as a compliment. And, of course, it's joyful to work with clients like you, too. So congratulations on your retirement and also your continued passion for other people. Yeah. So we appreciate your business.
We're having the time of our lives.
Yeah, we are.
Looking for an advisor you can trust? Schedule your free phone call with Tony at TonyWalkerFinancial.com or call 1-877-499-9255.
Well, powerful stuff there, Trey. It is amazing to see what our clients have been able to do in their free time in retirement. These client testimonials and spotlights have been pretty awesome for us to be able to introduce and share with others what the worry-free retirement is supposed to look like.
No, exactly right. And Savers, hope you enjoyed this show. Tony's going to be back with a brand new show next week. Between now and then, if you'd like us to review your situation, feel free to schedule a 10-minute fiduciary phone call. You can do that by logging on to TonyWalkerFinancial.com. Clicking that Let's Get Started button, or give us a call at 877-499-9255. Thanks for joining us.